Thank you, Len, and congratulations to you on the 40th anniversary of the Internet. Thanks to all of you as well for being so stalwart. And now I'm hopefully going to give you a little talk that's going to live up to your perseverance. It is really the bottom line on moving forward with the Internet, which is basically deciding what innovations we're going to invest in with respect to cutting-edge Internet applications. So let's set the bit first. The Internet has changed everything. Okay, make no doubt about it. Let's just take what we've heard at this conference. Every angle from a movie studio to an infrastructure provider to antivirus software to content providers. It's amazing how many people, millions and millions of people, are now involved with the Internet. When you look specifically at consumers, there has been a tremendous time and spend shift by the consumers to online, low-cost, decentralized media with many, many creators. Traditional media, we've heard the stats already today, have been highly disrupted. That's only the leading edge of all this. I actually think that all commerce is being disrupted, and we're only seeing the first wave of it with respect to the media. Now, rich media, and again, we heard this from another speaker, and video specifically, is providing a tremendous inventory online. You can see that it's growing to 4.5 billion just by next year in terms of what that media is. That's only going to become richer and is going to proliferate more as we move forward. And so as a result of all this, the consumer who dictates all of this in the end, and isn't that the most egalitarian thing of all, is getting more and more sophisticated. You know, the old adage was, half our advertising is wasted if only I knew which half. But that's no longer true in the web world. The analytics that exist and are starting to emerge and are creating companies in and of themselves, large companies, to create those analytics and to judge what is going on the web are truly amazing. We have one company, a company called Visible Measures, that simply is dedicated to judging the impact of video online, just video itself. So it's only the beginning. And how do we continue to go forward and build large, successful companies? So let's go backwards to go forwards. First, 1999, way back in 1999. Software, this is how the web was populated with content. Software was developed from scratch. User acquisition was using traditional offline media in order to create online users. Remember those days? Own and operate proprietary hardware, your own servers. Got to have your own servers and host yourself. There was expensive connectivity and high barrier to entry, both technically as well as financially. That was the way the web was. And that's only 10 short years ago. Today, open source software, ready-made development frameworks, user acquisition via viral growth, search, free media, outsourced hosting, connectivity is cheap, low barrier to entry technically and financially. So how do you create special companies when everything is so egalitarian, when everything's so democratized out there? How do you create value from the perspective of somebody like myself who's an investor or from the perspective of an entrepreneur? So here are the challenges and here are the opportunities. The challenges are, how do you manage your churn metrics? Change is so rapid now on the Internet. So how do you keep your users and keep them as loyal consumers to your site? Your advertising model increasingly works only at a massive scale. So the ad-supported sites, in our view at least, is not the wave of the future. That is not the way to go to get monetization out of the web. It's not going to be ad support unless you have significant presence on the web. What do I mean by significant? Well, 18 months ago, if someone came in and said they had 1 million uniques, we said, may be interesting, but we're not really, you got to get more critical mass going before we're going to be interested in investment in you. Today, if you walk in, 1 million is not going to get you through the door to even create a meeting. It's going to be 5 million uniques that's going to be necessary on an ad-supported platform to even start to get our attention as a prospective investment that could grow in the future. There's much more user choice and competition, as we talked about. And the investment exit environment is challenging. The bubble in our lifetime, or at least in my lifetime, let me put it that way, it ain't coming back, okay? Just like the tulip craze in the Netherlands did not come back, okay? It is not coming back. I can't tell you how many folks still talk about becoming the next Google and the rest. And that may happen, and I think it's wonderful. I've been in Silicon Valley since 1980, okay? And I've seen the next fill in blank many, many times. But for 99.9% of those companies, they're not going to be the next Google. So where is the opportunity? And it's interesting how much this resonates with the other speakers and what we were talking about. The large online, primarily mobile user base is something that we're highly focused on in terms of criteria. Fast growth in user acquisition models. It's got to be low cost. It's got to happen quickly. As a result, you can have multiple viable monetization models. You don't necessarily, so we get away from ads, we'll talk about that in a second, but you get into different ways to monetize and using various ways, experimenting a lot. And I'll go to the bottom point, actually, which is fail early and often. You go for it, fail, let's try something else. We've got many investments that we've made where we've had to do pivots constantly, 3, 4 months, another pivot on the business model. See what will stick, and in fact, the 3rd, 4th, 5th attempt may in fact be viable. Now, to the extent you think that that is some sort of a crazy investment theory and the rest, you may know the story about Hewlett and Packard. It was their 12th product, okay? Their 12th product, which was an analyzer, that was the first product that actually caught on, okay? It was not the first one. Now, they didn't do it within a matter of 3 or 4 months with, as I put down here, low capital in order to make those changes. That's one of the beauties of what we have today. It's also one of the curses, because that means that there's a lot more people doing it. So you've got to be a lot more nimble out there in order to make it all work. So where do we see innovation today? There's a global footprint of innovation, which makes it more challenging because it's happening all over the world, not just in the United States. But we still do see Silicon Valley as a hub of innovation, mostly because it has an ecosystem surrounding it that facilitates what I would call the offline elements of creating an online company that facilitate that and make it easier to do it, whether it's the lawyers, it's the ability to get real estate quickly, it's the access to others in a collaborative community, and it's a center of critical mass there that does help that. LA, though, actually has its advantages as well with respect to the media world. With tremendous respect to our media expertise up in the Bay Area, we are but pikers compared to what happens down here. This is much further along, much more sophisticated than the rest. And it was interesting to me here at the last panel, there's always been, and I've been in the middle of this many, many times over the last 20 years, the tension between Silicon Valley and the entertainment industry down here and the rest. I don't know whether I hope, like one of the speakers said, we're on the cusp of a coming together and a détente and all the rest of those good things. But there will always be somewhat of a mismatch between content and distribution. And I think that's the fundamental thing that we're dealing with there. But I do hope that that collaboration comes together. Anyone who can figure that out and how to facilitate that will be very well rewarded. But again, more likely to be anywhere than ever before and to be virtual. We see mostly bottom up. It is happening from successful entrepreneurs like the ones that we've heard from today. I think are classic examples of that they're embedded in the ecosystem, and so they understand those applications extremely well and have that intimate knowledge in the rest. And we often worry within our firm, and our venture capital firm, as to whether we're just too old a dogs. We just don't get it. So we've got to always get fresh blood in order to make sure we understand what's going on there at the edge. However, certain things haven't changed. There's most innovative solutions still have these two traits, a rigorous approach to customer adoption, absolutely being able to listen to your customer, understand what they want and the rest, and then have an outgoing, externally focused relationship building element where you collaborate with others and you are open and in order to not only stay abreast of what's going on, but as well understanding that none of these companies are islands in and of themselves. They have to collaborate. They have to have partnerships. They have to have relationships in order to ultimately be successful. So let's get to the bottom line, which is investing in this new environment. The implications for venture capital investment is that actually less capital is required than ever before to build consumer and enterprise applications. So we actually look to create more investments with smaller dollar amounts surrounding it. The failure mode is non-adoption, not technical infeasibility. So usually we do not encounter technical issues associated with the adoption on the internet or the success of our businesses. It's about adoption by the consumer or the enterprise itself, and I want to talk about that for just a second too. Now, what that leads to is it's likely smaller outcomes. When outcomes is a fancy word for saying how much money do we get out of the deal, it's likely going to lead to smaller outcomes. And so as a result, that creates more pressure on us than ever to deploy less money into a specific opportunity. As I indicated, more but smaller investments. We have an intense focus on metrics, adoption and churn. We're trying to create some sort of analytical framework in an area that, at the end of the day, is fundamentally subjective, but we are trying to create models around that and the rest. I do have to tell you, it's still more art, a lot more art than it is science. It's about the team. It's about sometimes the technology, but usually not, and about the market. So mostly, I would say 90% of our decisions in this area are about teams and markets. And at the end of the day, it's about the sense of feel for that. And I would be lying if I didn't say the economic crisis has, in fact, raised the bar for all of us. If you track venture capital investing, it has slowed down in the last year. Fortunately, we did not hit the wall, anything like New York did. We are definitely still in business and the rest, and our limited partners have been really good to us, and we have all the money we need and all the rest of it, but it has made us more cautious because as the environment develops, monetization is key for us, and we're not in an era right now where a lot of folks are monetizing a lot of things. So let me get very specific and tell you about a few examples of where we are making investments. We're making investments in social gaming. We're doing it in enterprise collaboration, where we think that basically bringing social networking into the enterprise context and taking from the consumer experience and moving into the enterprise is a very important area of growth inside the web. Frankly, it makes us a lot more comfortable being inside the enterprise because then we understand the logics and the economics of how people operate a lot better. We think that that's actually happening on a viral basis within corporations. Salesforce.com is a partial example, not complete, but a partial example of how that works, where basically the employee wanted to do everything inside the enterprise that they were doing at home on their computer. And we think that that trend is going to continue significantly in the future. And then finally, virtual goods. We get away from the monetization, the ad-supported networks. We think virtual goods also has a significant future for it as well. Thank you very much.